There are 3 phone calls that could potentially put hundreds of extra dollars back into your pocket every single month. And the surprising part is that millions of retirees never make a single one of them. Not because they're difficult, not because they cost money, and certainly not because they're reserved for a special group of people. Most seniors simply don't know these calls exist. Think about that for a moment. You've worked for decades. Every paycheck you earned contributed toward programs like Social Security and Medicare. You planned for retirement, paid your taxes, and trusted that when the time came, everything would be calculated correctly. So naturally, when your Social Security check begins arriving every month, it's easy to assume the amount is exactly what it should be. But what if it isn't? What if an old earnings record contains a mistake? What if you're paying a Medicare premium based on income you no longer earn? What if there's a savings program that could reduce your monthly expenses, but nobody has ever mentioned it to you? These situations happen more often than most people realize. Today's video could save you from missing out on money that may rightfully belong in your retirement budget. We're going to walk through 3 important phone calls that many financial advisors encourage retirees to consider. Each call serves a different purpose, and together they may help you identify overlooked benefits, lower certain Medicare costs, or correct information that affects your monthly payments. Now, before we go any further, I want to make one thing absolutely clear. This video is for educational purposes. Every retiree's situation is different. Whether you qualify for additional benefits or savings depends on your personal work history, your income, your Medicare enrollment, your state of residence, and current Social Security and Medicare rules. Nothing in this video guarantees an increase in benefits. But here's what I do know. Questions cost nothing. A phone call costs nothing. And spending one afternoon reviewing your records could potentially save you money for years to come. That's why it's worth paying attention. I also want to ask you something. Have you ever looked closely at your Social Security payment and wondered, how did they calculate this amount? Or have you simply trusted that everything was correct? Most people choose the second option. After all, these are government agencies. We assume they have the correct information. And in many cases, they do. But government systems process millions of records every year. They're built to operate automatically, relying on information reported by employers, tax records, and previous filings. While these systems are incredibly efficient, they aren't designed to call every retiree and ask, "Would you like us to double-check your records?" That's not how the process works. Instead, much of the responsibility falls on the individual. If you notice something unusual, if your income changes dramatically after retirement, if you believe part of your earnings history isn't reflected correctly, you usually need to start the conversation. That's why today's 3 calls are so important. Each one is focused on a different area where retirees sometimes overlook opportunities to review or improve their financial situation. The first call deals with your Social Security earnings record. The second could help reduce one of the largest deductions many retirees see every month. And the third involves a Medicare rule that catches thousands of new retirees by surprise because it uses information from years before they actually retired. Many people continue paying higher premiums long after their income has dropped, simply because they don't realize they can request a review. We'll explain exactly how that works later in this video. So don't skip ahead. The third call is often the one that surprises people the most. But before we get there, let's begin with something that affects the very foundation of your retirement income, your Social Security earnings record. Every monthly retirement benefit starts with one thing: your lifetime earnings history. Social Security doesn't simply pick a number out of thin air. Instead, your benefit is calculated using the earnings that were reported throughout your working career. Every employer who paid you wages submitted information to the government. Those records became part of your permanent earnings history, and eventually, they were used to calculate your retirement benefit. At first glance, that sounds straightforward. But here's the important question. What happens if one of those records isn't accurate? What if an employer accidentally reported lower earnings? What if self-employment income wasn't properly credited? What if a year of work never appeared correctly in your record? You might assume those errors are automatically caught and corrected. Unfortunately, that's not always the case. In some situations, an incorrect earnings record can remain unnoticed for years unless the beneficiary requests a review. And that's exactly why the first phone call is so valuable. In the next part, I'll show you exactly what to ask when you contact Social Security, why simply asking, "Is my check correct?" isn't enough, and the specific request that could lead to a review of your earnings history, and, in some cases, a recalculation of your retirement benefit. One more thing before we continue, and this is where many people unknowingly lose money without ever realizing it. Think about this for a moment. When your Social Security check arrives each month, most people look at only one number, the amount that lands in their bank account. They rarely stop to ask how that number was calculated or whether every deduction is actually supposed to be there. That's exactly why millions of retirees continue paying charges they may no longer owe. And here's something that surprises almost everyone. Government agencies generally process information based on the records they already have. They don't automatically review every retirement, every income change, or every life event to see if it affects your premiums or benefits. Unless you notify them, the system often continues using older information. That's why the next step we're talking about today could become one of the most valuable phone calls you ever make. This call isn't about increasing your Social Security benefit directly. It's about stopping unnecessary money from leaving your monthly check. If you've retired recently, if your income dropped after leaving work, if your spouse passed away, if you divorced, or if you experienced another major life event that significantly reduced your income, you may be paying a Medicare premium based on income you no longer earn. Most people have never heard of this because the name sounds incredibly complicated. It's called the Income-Related Monthly Adjustment Amount, better known as IRMAA. Don't let the name intimidate you. The concept is actually very simple. Here's how it works. Medicare doesn't always use your current income to determine certain premium adjustments. Instead, it often looks at your federal tax return from 2 years earlier. Imagine someone earned a high salary while working full-time in 2024. Then they retired in 2025. By 2026, their income might have dropped by half, or even more. But Medicare could still be charging premiums based on that older, higher income. Can you see the problem? You're living on retirement income today, but you're paying premiums based on a paycheck you no longer receive. That's frustrating. And thankfully, there is a process that allows eligible people to request a new review after certain life-changing events. Many retirees never realize this option exists. Instead, they continue paying the higher premium month after month, believing that's simply the amount they're required to pay. Over the course of a year, those extra charges can add up to hundreds or even thousands of dollars. Now here's something important. Retirement itself is considered one of the qualifying life-changing events that may allow you to request a review. Other qualifying events can include the death of a spouse, divorce, marriage, loss of income-producing property in certain situations, or other circumstances recognized by Medicare rules. If one of these events significantly reduced your income, you may be able to ask Medicare to reconsider the premium being charged. The form commonly used for this process is called Form SSA-44. Again, you don't need to memorize that right now. The important thing is knowing that the option exists. When you call Social Security, you can simply explain that your income has dropped because of retirement or another qualifying life-changing event and ask how to request a new IRMA determination. The representative can explain the next steps and tell you what documentation you'll need. Usually, they'll ask for evidence showing why your income changed. That might include retirement documentation, a letter from your employer, income statements, or other records supporting your current financial situation. The process isn't designed to be difficult, but it does require you to ask. No one is automatically going to call and say, "Congratulations, your income went down, so let's lower your Medicare premiums." That's simply not how the system works. And here's another detail many people overlook. If your request is approved, the adjustment isn't always limited to future premiums. Depending on your situation and timing, you may also receive corrections for amounts you previously paid while the outdated income information was being used. Every case is different. Eligibility depends on individual circumstances, but that's exactly why making the call matters. Even if the answer ends up being no, you'll at least know you checked. And if the answer is yes, you could keep more of your own retirement income each month. Now, while we're talking about making these calls, let me give you a tip that can save you a tremendous amount of frustration. Always keep notes. Write down the date you called. Record the time. Write the name or employee ID of the representative if they provide one. Ask for a reference number whenever possible. If documents need to be mailed, write down exactly what they requested. If they tell you to wait 30 days, write that down too. These simple notes become incredibly valuable if you ever need to follow up later. Many retirees find that organized records make future conversations much easier because they don't have to start from the beginning every single time. Now here's another mistake people often make. They call once, get transferred, wait on hold, become frustrated, and decide it isn't worth continuing. Please don't make that mistake. Government offices handle thousands of calls every day. Sometimes you'll reach someone with years of experience. Sometimes you'll reach someone who isn't familiar with every program. If something doesn't sound right, remain polite. Ask if there's another representative or supervisor who can review your situation. Persistence often makes the difference between receiving accurate information and walking away confused. Remember, you're not asking for a favor. You're simply asking them to review your own record using the rules that already exist. There's absolutely nothing wrong with doing that. In fact, it's one of the smartest financial habits any retiree can develop. Because retirement isn't just about earning money anymore. It's about protecting every dollar you've already earned. And before we move on to the final part of today's video, I want you to remember something. So far, we've covered reviewing your Social Security earnings record. We've discussed checking whether you qualify for programs that could reduce Medicare costs. And we've talked about requesting a review if your Medicare premiums are based on outdated income. But there's one final section that ties everything together. I'll show you how to organize these calls in the right order, explain the biggest mistakes people make after making them, and share one bonus tip that many financial professionals recommend to retirees every year. So stay with me, because the final few minutes could help you avoid costly mistakes and make sure none of these opportunities slip through the cracks. Now, let's put everything together, because knowing about these three opportunities is only helpful if you actually take action. Think of these as three separate doors. Each one could put money back into your retirement. Some people will qualify for one. Others may qualify for two. And some may qualify for all three. The only way to know is to check. So here's the order I recommend. Start with Social Security. Ask them to review your earnings history year by year. Request a benefit recomputation if necessary. If you're receiving survivor benefits as a widow or widower, ask them to verify that you're receiving the highest benefit you're entitled to under current rules. Once you've completed that step, move to your state's Medicare Savings Program office. Ask about the Medicare Savings Program. Ask about the income limits. And while you're already on the phone, ask whether you also qualify for the Extra Help program for prescription drug costs. One phone call, two important questions, potentially hundreds of dollars in annual savings. Finally, if you've retired or experienced another qualifying life-changing event that significantly reduced your income, contact Social Security again regarding your Medicare premium adjustment. Ask about filing Form SSA-44 if it applies to your situation. By following this order, you'll have a much clearer picture of every possible opportunity available to you. Now, I want to point out three mistakes that seniors make over and over again. And unfortunately, these mistakes often cost them far more than they realize. The first mistake is assuming everything is already correct. This is probably the biggest one. Many retirees believe, if there was a mistake, someone would have told me. Unfortunately, that's not always how these programs work. Government agencies process millions of records. Most calculations are automated. If information is missing, if income changes, or if your circumstances qualify you for another benefit, the system may not automatically alert you. That's why reviewing your own records is so important. The second mistake is waiting too long. Some people hear information like this and think, I'll make those calls next month. Then next month becomes next season. Then next season becomes next year. Before they know it, they've spent another 12 months paying more than necessary or missing benefits they may have qualified for. Even if each opportunity only saves a modest amount each month, those dollars add up surprisingly fast over time. The third mistake is giving up after the first obstacle. Let's be honest, government phone lines aren't always quick. Sometimes you'll wait on hold. Sometimes you'll need to call back. Sometimes additional documents will be requested. That can feel frustrating, but remember why you're doing it. Imagine spending one afternoon making phone calls that could potentially improve your finances for years to come. That's a worthwhile investment of your time. Be patient. Stay organized. Take notes. Follow up when necessary. Persistence often pays off. Now, I also want to share one bonus tip that many retirees overlook. If you usually owe federal taxes because of your Social Security benefits, Ask Social Security about voluntary tax withholding. Instead of facing an unexpected tax bill later, you can choose to have a portion withheld from your monthly payments throughout the year. It doesn't increase your benefits, but it can make budgeting much easier and reduce unpleasant surprises during tax season. For many retirees living on a fixed income, predictability is just as valuable as additional income. Now, before we finish today's video, I want to be completely transparent. Every person's situation is different. The amount someone could save, or whether they qualify at all, depends on factors like their earnings history, retirement date, Medicare premiums, income, assets, state rules, and individual circumstances. Nothing we've discussed today guarantees additional money. Instead, these are legitimate programs and review processes that many eligible retirees simply never ask about. And that's really the biggest message I want you to take away today. Don't assume. Verify. Don't guess. Ask. Don't leave your retirement income to chance. Take one afternoon this week. Make these calls. Review your records. Write down the answers. Because no one cares about your financial future more than you do. If even one of these conversations uncovers an error or confirms you're eligible for a program you didn't know existed, the time you invested could pay dividends month after month for years to come. And if today's video helped you understand these opportunities, please take just a moment to help someone else. Share this video with a friend, neighbor, sibling, or family member who receives Social Security or is approaching retirement. You never know whose benefit record hasn't been reviewed, who may qualify for Medicare Savings Programs, or who's paying higher Medicare premiums simply because no one told them there was another option. Sometimes a simple conversation can make a meaningful difference in someone's retirement. If you found this information valuable, don't forget to subscribe and turn on notifications so you never miss future updates about Social Security, Medicare, retirement benefits, and financial changes that could affect your monthly income. Thank you so much for watching. I truly appreciate you spending your time here today. Take care of yourself, stay informed, and I'll see you in the next video.